It's Monday, the 19th of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Economic growth forecasts cut by up to 1% as business leaders offer help with the vaccine distribution to try and get a grip on the COVID outbreak. That's our main story. Also coming up in today's podcast, the federal government's popularity tumbles on the back of the slow vaccination rollout. Rio Tinto delays new mines because it can't find workers. And F45 gym owners become multi-millionaires as the company lists on Wall Street. Then, stay listening for my chat about how to find the best investment opportunities in the market. But first, here's a brief look at markets. It's a big week coming up for Wall Street, with several large companies reporting second quarter earnings results, including IBM, Netflix, Johnson & Johnson, Twitter, and Intel. Major indices on Wall Street last week fell for the first time in a month on fears of higher inflation and the growing number of COVID cases across the country. The S&P 500 and tech-heavy Nasdaq both closed down 0.8% over the weekend, and the Dow Jones Industrial Average was off 0.9%. European markets ended lower over the weekend. For the week, London's FTSE 100 finished down 2%, while the Spanish bourse fell 1.5%, and the German and French markets closed more than 1% lower. The S&P ASX 200 finished up 0.2% on Friday to 7,348 points and closed the week 1% higher than where it started. In the bond market, yields on 10-year Australian government bonds are back below 1.3%, well down from the 1.8% earlier in the year. Remember, when people demand bonds, their price goes up and the return or yield goes down. People want bonds at the moment because of the increased economic uncertainty flowing from the COVID outbreak. Oil prices were lower over the weekend and Brent crude is fetching a little over $73 a barrel. The good news is that overnight, OPEC agreed to add 400,000 barrels a day to production from next month. That should keep a lid on prices going forward. Gold prices fell in weekend trading. The Aussie dollar slipped below 74 US cents and is back to levels of late November 2020. In the short term, the Aussie dollar is highly correlated to interest rate expectations. The COVID outbreak has dampened expectations of a rate rise in Australia, but in the US and other parts of the world, inflation has pushed up expectations of a rise sooner than expected. As a result, the local dollar has depreciated. And coal prices rose further over the weekend, with futures trading at $150 a tonne. A heatwave in parts of China has pushed up demand, and since they're not buying from Australia, Chinese consumers are paying more for energy. Unusually warm weather in Japan, South Korea and the United States has also added to demand. Coal prices are now at their highest price in a decade and up 40% in the past 2 months. Business leaders have offered to help with the coronavirus vaccination rollout across the country. As the crisis escalated over the weekend and Federal Treasury warned that economic growth will be hit hard this quarter. A phone hookup of about 250 business leaders on Saturday with New South Wales Treasurer Dominic Perrottet discussed the impact of the hard lockdowns in Greater Sydney and Victoria. The bosses of Coles, Woolworths, Wesfarmers, Cochlear and Mirvac were all on the call, according to the Financial Review. The focus of discussions was on the extent of the Sydney lockdown, how to emerge from the lockdown, and how to prevent another. Business leaders want to play a lead role in vaccinating Australians. Over the weekend, there were 222 new community-transmitted cases in New South Wales and 35 new cases in Victoria. Victoria is due to come out of lockdown tomorrow, but that could well be extended because some of the most recent cases were in the community while infectious. There were no other community cases across the country. The New South Wales government imposed much tighter restrictions, particularly on the retail and construction sectors. Both sectors are big employers, and the new rules will have tremendous flow-on effects for the rest of the economy. In the case of retail, some of the hardest hit regions in southwestern Sydney are home to distribution centres, and without a flow of people in and out, stocking shelves could be difficult. Commonwealth Bank over the weekend confirmed it would offer 2-month deferrals on home loans to customers in the hardest hit geographies and in the construction and retail sectors. The other 3 big banks, ANZ, National Australia Bank and Westpac, are all offering leniency on loans. The bank CEOs who have watched their companies' share prices underperform over the past week as the magnitude of the COVID wave became clearer were united in calling for greater vaccination across the country. According to the Fin report, Prime Minister Scott Morrison and Federal Treasurer Josh Frydenberg spoke to the big bank CEOs over the weekend as well, and the lockdown in New South Wales had already erased half a percentage point of economic growth for the September quarter. Market economists are putting the cost of the lockdowns at close to $10 billion, assuming a 7-week lockdown in Sydney and a longer than 5-day one in Victoria. That could mean the economy going backwards this quarter. In a moment, the rest of the news you need to know this morning. In overseas news, consumer sentiment in the United States has fallen to its lowest level in 5 months. The potential for inflation has been in the news, and consumers are worried about price hikes, the University of Michigan survey said. When people think things are going to get more expensive, what do? They tend to buy more now, and purchase rates have hit record levels. Fed Chair Jerome Powell was appearing before Congress over the weekend and was asked what he thought was the most significant systemic threat to financial stability in the US or globally. While China or COVID-19 or inflation might have been the expected response, Mr. Powell said the thing that worried him most was cyber security. It was a bad weekend for COVID cases globally. The United Kingdom is due to lift all restrictions today, but on Friday and Saturday it recorded 50,000 cases on each day, including the country's health secretary. New York State reported more than 1,000 new cases for the first time since mid-May. Thailand and Singapore have found new clusters, and at least 2 Olympians in the Tokyo Village have been found to be positive. There's now been 190 million recorded cases of coronavirus and 4.1 million deaths. Locally, the federal coalition has fallen to its lowest electoral position this term amid the COVID lockdowns and frustration with the rollout of vaccines, according to Newspoll in the Australian newspaper. Voters are losing confidence in Scott Morrison's management of the pandemic, with support for the coalition and Labor deadlocked at 39% respectively. On a two-party preferred basis, Labor is ahead 53 to 47%. Mr Morrison still remains the preferred Prime Minister by quite a margin, something that Labor leader Anthony Albanese needs to address before the next election. The auction market in the 2 capital cities affected by the lockdowns remained decent over the weekend, notwithstanding the number of houses going to market fell. Both had clearance rates of around 77%, according to preliminary figures from CoreLogic. Adelaide was the standout city around the nation with a clearance rate of 83%, while Canberra was at 82%. Rio Tinto said a number of new iron ore mines would be delivered later than planned as a result of labour shortages in Western Australia and a more consultative approach to Aboriginal heritage. It came as the mine reported its weakest first-half iron ore export performance since 2015. The drop reflected heavy rainfall, maintenance disruptions, as well as the labour and consultations-based delays. The mines under development are worth more than $4 billion. Rio's share price fell 0.4% on Friday. While it wasn't a great session for Rio, the miner ended the week more than 4% higher. All the economic news out of China last week was pretty good, with manufacturing pumping out products. That's helped keep the price of iron ore elevated, and the Australian miners have benefited. On Friday, BHP hit a new record of $51.87 a share and was up nearly 5% for the week. Fortescue Metals was up 8% over the 5 days, and Champion Iron, another iron ore miner, was up 8.6%. The annual Edelman Trust Index is released today, and according to media reports, 8 out of 10 Australians trust their employer, but only half trust the government, and even less the media. Having faith in whoever employs you is a trend that emerged strongly during the pandemic. The index is global, and Australia's trust in government sits around average. Interestingly, the 2 countries where trust in government is highest is China and Saudi Arabia. Whitehaven Coal's share price jumped to 4.5% on Friday, reversing the losses from the previous day. With coal prices around 10-year highs, Whitehaven arguably should have done better, but low-quality coal and production hiccups, as well as pricing below the spot rate, has hurt the group. It also digs up stuff, coal, that isn't the most politically correct commodity at the moment. Whitehaven's share price is up 150% on late last year, but still more than 60% lower than 3 years ago. Evolution Mining's share price fell more than 5% on Friday after the group said it had produced about 20% less gold last financial year than it had back at its peak back in 2017. The weak output is at a time of high gold prices, and it makes it 4 consecutive years of reduced production. Evolution said it will invest billions of dollars in the next 2 years in an effort to halt the slide, including a $380 million expansion of its Cowal mine in New South Wales. The company has forecast an increase in production this financial year on the back of the new investment in Cowal and its Red Lake mine in Ontario, Canada. Wesfarmers has received West Australian government approval to build a lithium hydroxide refinery as part of its Mount Holland lithium project. Lithium is one of the hottest metals at the moment because of its use in rechargeable batteries. Think mobile phones, laptops, electric vehicles, electronics, and Wesfarmers is investing heavily in the project with a Chilean partner. Seven Group now owns almost 57% of building companies Group Boral, having picked up another 4% on Friday. The offer period for the takeover has been extended until 29 July. And the float of F45 on the New York Stock Exchange late last week has turned the founders of the business into instant rich listers. The group listed and is worth $1.6 billion. It was founded in a gym in Sydney's Paddington, grew and attracted investors including Hollywood star Mark Wahlberg, and has now sold more than 2,800 franchises in 63 countries. One of the founders, Adam Gilchrist, not of cricketer fame, who has stayed with the company, is now worth about $500 million. Good on him. Keep listening because up next is our daily interview. Today I'm talking to Roger Montgomery, the founder and chief investment officer of Montgomery Investment Management, about the takeover frenzy on the markets in recent weeks. We look at the role of super funds, whether buyers are overpaying for assets, and most importantly, what it all means for everyday investors. Roger has some great advice on how to set yourself up and take advantage of the rush of takeovers, which is likely to continue for some time. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget, on Mondays, we also released our other podcast, Fear and Greed, The Week Ahead. Economist Stephen Koukoulas and I take a look at the big economic news coming up this week, and we get his take on last week's unemployment numbers and the ongoing impact of lockdowns. It's a very handy guide to everything you need to know about the economy, and all in under 10 minutes. It's Monday, the 19th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.